Hello everybody, I hope that you are all doing well today. It is Apex here with another video. Today I will be doing a market sector analysis, going over each of the major market sectors, doing a really in-depth breakdown of the technicals right now. As many of you probably know, we are in a very choppy phase in the market. Not a whole lot of directional confluence has been made. We're going up, we're going down, bear volumes coming up, followed by bull breaks, bull volumes coming in, followed by bear breaks. It's kind of just all over the place. So hopefully this video can clarify a little bit of the technicalities behind the movements and what levels to watch. So starting with SPY here, I made the video on Monday, I believe, talking about this channel and the Fibonacci levels and how we saw a lot of confluence between three indicators, the 55 EMA, this channel, and the golden pocket here. So you can see that price has made a strong impulse wave to the upside, pull back to the key support, and bounced. However, we're not getting that definitive traditional, I guess you could say, V-shaped recovery out of the bulls. There's a lot of hesitancy, a lot of lollygagging. Investors aren't really sure which way the market is going. Bulls are a little bit timid because obviously the market is at extreme levels, but bears can't really get their bearings about them either because this is still technically a bullish setup. So like I said, this kind of confusion, I guess you could say, is adding to a lot of the indecision and ultimately the market chop that we are seeing. So today's price action formed a nice inside bar on declining volume. So I mean, this can break either way. And we are looking for the high or low of today for directional confluence into the latter half of the week. So we're watching 390.07 or 386 even for that directional Q. Now this marker here at 392.23 is my interpretation of what will be a bull break. So you can see that price has dipped, we saw a bounce, we saw a lower low, and now we've seen a lower high. So we're tightening up a little bit here, forming an equilibrium. If we get that 392.23 break, this will be a bull break, and my target price for this is right around 400. That's absolutely ideal. The only bear case in this scenario is if we roll over and break the February 26th low of 378.23. If the bears manage to do that, there will be strong conviction to the downside, in my opinion, where we will see a little bit of a broader market correction, something similar to here in September and November. But if the bulls can hold that level, then things are okay. So zooming in on the hourly chart, let's break down the price action that we saw today. Take off my drawings so it's a little bit more clear. So we can see that price made a bounce the other day right off of that golden pocket here. I guess I can't take off my drawings. My bad. Anyway, you can see price made a notable bounce from this golden pocket here. We saw an impulse wave to the upside, a higher low, and then a huge gap up. And the bulls were looking for strong conviction out of this bounce, but we just haven't seen it quite yet. So today we saw the massive, so this morning we saw an immediate dump, but then price tried to stabilize, made a lower high, and now started rolling over. So we have formed a bit of an equilibrium here on the hourly chart. So this could be a basis for continuation to the upside. The only two things actually lie in the volume indicators. So what I see here is just a tremendous amount of bear volume. Every bullish impulse wave to the upside is declining volume, and most of the bear rollover price action moments see increasing bear volume. And that is concerning to me. So I made a tweet earlier in the day that all we were looking for was an hourly higher low. So look for 5-minute trend changes, 15-minute trend changes, or hourly bullish candles. We got a great hourly Dragonfly Doji at 11:30, but you can see the volume, right? It's declining. Then we made a lower high because this pullback was enough that bulls top fished this pivot high, or bears top fished that pivot high for a short entry, and then we see increasing bear volume going into the close. So there are some notable red flags here. Bulls were unable to get above this volume shelf here, which they will have to do in order to see continuation to the upside. This bull break level is at such a convenient area because if price is able to get above, hold this volume shelf, we can easily see 400 here. But if not, we're just going to continue to see weakness to the downside. So we can look at the 4-hour, try to see that equilibrium set up a little bit better. So we see the low, lower high, lower low, lower high, and we're looking for a higher low here. So there's a potential for a bounce right around this volume shelf in the low 380s. If that's the case, then we can hopefully see continuation to the upside. The chart guys made an excellent point in their latest video talking about how this could potentially shape up for a inverted head and shoulders. That is the bull's best case scenario, and it is something that I will be watching closely. Overall, SPY is just in a big mix of confusion and a lack of direction, so we're going to have to be patient and endure some more chop for the interim future. QQQ, a little bit more bearish here. So obviously it is situated not as ideally as SPY. SPY still has that daily uptrend intact, where QQQ has lost a key pivot and is already looking like it's making a lower high. So we have the dump, a weak bounce, and now it looks like we might be rolling over for the next leg down. Now, this is obviously not confirmed. Bulls ultimately have to lose this key support right around 311 and ultimately this volume shelf. If that actualizes, then we'll look for more continuation, probably to around this lower channel trend line, which coincides very nicely with the golden pocket. We have the 100 EMA acting as support just above the 0.5 Fibonacci level. So hopefully if a roll down does happen, it's more of a bear trap and bulls can rally from that 100 EMA as they did historically over the last few months. But we'll have to see what happens if price gets down to those levels. So if it is looking like it, if rollover does actualize, the Fibonacci targets are roughly located, like I said, around that golden pocket to the 0.5 Fib. So it does make sense to see a little bit of follow through to that 100 EMA and then a bounce, but only time will tell. On the hourly chart, QQQ is definitely still situated in a good position as a bull, but it still has a lot of work to do. So we saw this double bottom here, lower high, higher low, bull break on the hourly chart. We're looking for that hourly higher low to continue the next leg up, but already this pullback, lower high, and continuation to the downside is telling. It does show there's no bullish conviction in this move, or very little at least. So the bulls will have to reverse that trend, set a higher low, and break the interim pivot high, ultimately getting over this 325 psychological level in order to see some more conviction. But again, we can see that this is turning into a potential inverted head and shoulders. We have a big volume shelf acting as support, so if price does roll down to where that right shoulder should be, it does make sense to see, or it would make sense to see a bounce from that level. But on the hourly chart, QQQ isn't set up too bad. On the daily chart, it's a little bit of a different story. So hopefully the bulls can come through. IWM has been the strongest sector out of the main three. We see a nice strong impulse wave to the upside, running into that top trend line resistance, pulling back nicely to the lower trend line and golden pocket. And so we're looking for more continuation up to the algo targets, ultimately around 245. However, today's price action just isn't very convincing. We lost the low of yesterday on declining volume, so that is something to note, but just a bearish candle overall, potentially filling the small gap that we have. On the hourly chart, we can see we got the bounce, higher low, higher high. Again, similar to the rest of the sectors, we're looking for that higher low, but the size of this hourly pullback is convincing, or is telling for me that bears are still predominantly in control, I guess you could say, and the bulls are just a little bit timid. We do have this big volume shelf acting as resistance, so ultimately, similar to SPY, IWM needs to get over top of that volume shelf to see any continuation from here. But IWM is still situated very nicely overall, not making a bull flag, but definitely making a bullish pattern. So hopefully we can turn this into a higher low and see continuation into new all-time highs. Tan definitely looking weak here. So I have this channel drawn out, very nice interactions. We see price break above, retest, break above, retest, roll over, retest on a bear break, and then see continuation down to the bottom trend line where we bounced. Now, right now on the daily chart, we are making a lower high like other sectors. So we saw a weak bounce to that middle trend line, and it does appear that we are rolling over. Tan is a little bit more bearish than the other sectors because we see declining bull volume and increased tick on bear volume in today's session. So hopefully this can turn into a bounce, higher low, and then continuation. This is kind of like a neutral setup where it's not as definitive. Just based off how low of a bounce, though, I am a little bit cautious about potential bull or potential bear follow through, but this can go either way right now. Looking in on the hourly chart, we see price making hourly higher lows into higher highs. So that is what we are looking for now. The trend over the last couple of days has been a deep correction, so it does make sense to see price pulling back as much, but we do have to get up and over this interim pivot high to really set the conviction in the solar market again. Daily RSI has cooled off considerably. Obviously, we're at the 40s, so we'll look at the weekly chart. Weekly is seeing some RSI consolidation cooling off a little bit, which is good to see. And if you look on the weekly chart, the 21 EMA is acting as support. So this is kind of like a weekly holy grail. So there is, again, just the overarching message and theme in the market right now is there's just a lot of indecision. There's as much of a bull case as there is a bear case, and that's why we're seeing such choppy price action. But from a longer term price action analysis right now, Tan is situated well. So I'm confident that the bulls can pull this off, but we just have a lot of work to do. SMH showing, again, some weakness here. So here's the nice, beautiful channel. We saw a strong run up and a nice correction to the golden pocket. So we are looking for a bounce ultimately to around the 270 level upper trend line here. I think that can still actualize. I mean, SMH is situated in a nice position right here. Like I said, we are just trying to make a higher low until the bulls lose 224.93. There's nothing to worry about. But just seeing today's price action again, we have another case of 2 declining days of bull volume and then an increase of bear volume at the lower high. So we dumped lower high. If we roll over, that is going to be alarming. So I guess the main pivot that the bulls need to defend is this one here of 232.88, and that's ultimately what the bulls, like I said, need to defend. If we lose that level, then we are in a daily downtrend with the lower high up here. XLV. So this was one of the sectors that was helping to hold up SPY today. As you can see, it's ranging in this very nice channel. Price, it's a little bit hard to differentiate. You kind of have to look at the weekly chart. Price had a nice run up here, higher low, higher high, and then it's still trying to make this higher high, higher low equilibrium here. So we will look for potential continuation to the upside. We are retesting that middle trend line and seeing a nice bounce around there. The 382 is acting as support. So overall, this XLV isn't situated too terribly. You can see here that we have a nice impulse wave to the upside. We made a higher low. Bulls were holding this sector quite well for the most part in the day, and that was helping SPY find some balance early on as other sectors were looking very weak. But XLV is kind of just oscillating in no man's land right now. It's not a whole lot to update about this sector, but XLF, here we are seeing something a little bit more interesting. So we have, again, nice channel, strong impulse wave to the upside, pretty shallow pullback, not even to the 382, but we are seeing a lower high trying to set already. So this will potentially build into an equilibrium, and then we might see explosion up to the top trend line, or this will roll over and we'll have to retest probably the 0.5 or the bottom part of this trend line. Looking at the hourly chart, so we have a higher low, bull break, and bulls are holding very well here. Like, this is okay for me. The volume is a little bit skewed to the bear's favor, but this was another sector that was holding on very well, helping SPY stabilize. Like I said, when IWM and QQQ, TAN, SMH were all looking quite weak. But based off the relative strength in this sector today, once the market gets its bullish bearings under it, I do anticipate this to see continuation to the upside. And the last sector looking at today, the second last sector actually we'll look at today, XBI. So again, we see it raining very nicely in this channel. We saw a fake out to the upside and then a steep sell-off ever since. So price is barely holding the 782. This is a very bearish sector, probably the most bearish, I would reckon. If we remove this fib, zoom out to the weekly chart, we'll draw another Fibonacci extension to see where this weekly higher low is most likely to be set. So we are getting a nice price interaction with the 382, but that being said, based off this increasing bear volume, it is likely that we might see a retest of the 0.5. Now obviously we have this key pivot level situated in and around that area, which the bulls would ideally love to hold, but it might not be the case based off this bullish or this bearish uptick in volume. Nonetheless, if we do correct a little bit more to the 0.5, I would expect a reasonable bounce, make a higher low compared to our February 8th pivot high, and then have to work its way out of the equilibrium. And the last ticker I will look at today is the dollar. So as I mentioned before, the dollar is situated for a weekly trend change. If we break over 91.6, that is going to be telling, and the asset bull should be very cognizant of this possibility. Now we have seen a nice rejection candle today. I am hoping that we can see bearish follow through and ideally break that 89.6 level. If not, again, bulls have to be very careful of 91.6 breaking. If that's the case, I would anticipate more pullback in the broader markets, and the bearish scenarios that I outlined briefly today might actualize. Conversely, if we see a rollover to the downside, the bullish outcome for the assets is the most likely scenario. Now, the correlation between the two has been spotty at best. The chart guys noted that commodities are reacting a lot more closely to the dollar than Bitcoin and the assets are. So, and this is indicative of how the dollar had a red day and overall the markets had a very red day. The only one that didn't was the marijuana sector. So again, keep an eye on these two levels for directional confluence. So just some concluding notes here. Overall, things aren't bad, but they're not very good. Like I said before, as many bullish scenarios as there are, there's just as many or just as notable bearish scenarios, which is why the market can't really make up its mind. Ideally, what we want to see out of SPY is this bull or this equilibrium structure here actualize into a bullish setup. Right now we are situated okay. We have made a strong impulse wave to the upside. The only thing that the bulls are looking for is to set a higher low. If we get a little bit deeper of a correction here, maybe to this 382 level, just to retest the bullishness, we could make that inverse head and shoulders and see continuation to the upside. However, if more weakness comes into the market from these levels and we see a deep correction, the most likely outcome would be a lower high, and that might be exactly what the bears are looking for to confirm that bearish momentum to the downside. But overall, things aren't looking too bad, not looking too good. Keep an eye on the high and low of today for directional confluence into the latter half of the weekend. So I hope you enjoyed the video. If you did, give it a thumbs up, and I will talk to you next time.